All right. Hello, everybody. It's good to see you. Thank you very much, Greg, for not saying break a leg since I broke a leg earlier this year. um, Welcome to the event. It's good to have you. If you have questions as we go today, make sure if you're in GoToWebinar, you can just hit the questions box, type them in there, and we'll be able to see them. If you're in YouTube, if you're on YouTube, simply type it in the chat box, and we'll make sure that we'll get them answered for you. If you are watching us on YouTube, make sure to like and subscribe. It helps a great deal. My name is Jeff Gibby. I'm going to kick us off with a legal disclaimer. Let's go. Today's demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So, hope you enjoyed that. We do have a very special guest with us today to present to you. His name is Jeffrey Scott. Jeffrey Scott's been a longtime user of MetaStock and has developed a very, very elegant approach to looking at the market. He's going to talk about it. It does top-down analysis. He's also got a bottom-up approach that he talks about in his manual. This is his very, very, very first MetaStock webinar, and we would like to welcome him in here. Jeffrey, let's go ahead and get you started. Also, nice name. I forgot to mention that part.
All right. Can you hear me?
I can hear you, yeah.
And soon you'll see me. Perfect.
Yep. And then let's go ahead and have you share your screen. I'm going to go ahead and make you the presenter right now.
All right.
And then I'll make sure we can see the proper screen. I understand you're joining us from Florida.
I am. I live down in West Palm where the weather's nice and a balmy 80 degrees.
That sounds warmer than here. All right, I can see your side, I can hear you, and I can see you. And those are all the things that tell me it's time to get out of the way. Your turn. Go.
All right. So as I mentioned, I'm sort of new to this platform. Just you still see my PowerPoint?
We can. Absolutely.
Okay. All right. So
and
I
I'm
just
here. If you need anything,
if I have any problems. All right. So I probably don't have to play with the GoToWebinar controls. All right. Well, thank you so much for inviting me, and welcome everybody that's here. In the first 5 or 6 slides, I'll go over my background and what I do and how I do it. And then we'll jump into the program and I'll show you some of the tools that I've been using for a long time. Jeff mentioned I have been a long-term customer. Those of you that are old enough to remember DOS, that was my initial versions of MetaStock, were the DOS versions. So thank you. And my email address is there. I respond individually, and I have a Google group, which I'll mention as well. Jeff already gave the disclaimer, so I won't go through every line. I'm going to talk about how I use the tool. I'm not going to talk about how I trade or what I trade, and there's certainly never a guarantee of any outcome. There's so much to a trade. I always, so many people ask me, what should I trade? And I remind them that a trade isn't just finding a stock or looking at the market, it's knowing when to sell and take profits. And I don't ever call them back and tell them when to sell, so I don't like to give tips. And I'm really honored to be launching my tool set into MetaStock. I mentioned the Google group. I have been helping people learn how to trade for, close to 30 years. I started trading in the late 80s and early 90s, so that's a long time ago. And I've been very fortunate along the way to meet some really great mentors. Many of them have passed to the mentoring in the sky, but I like to help. And so I have a Google group. It's called Top Down Trader. There's no hyphen in the group. And I post videos, I do market commentary, and I have a number of different tools. I trade the same way regardless of what the platform is, and I vary which tool that I use, but I try and post videos so people can see how I use the tools. And it's free, there's no cost at any time. And the best part about a Google group is you have to join and you can unjoin without any input from me. So love to have you join and see what we do. I'm a cancer doctor, a medical oncologist. I'm board certified in internal medicine and oncology, so I don't have any of those fancy licenses that would allow me to manage your money or tell you what to do. As I said, I've been in the market since, well, probably the late 80s, early 90s. I quit practicing in 2001 because all the trading stocks and reading balance sheets, which I did early on, got me wanting to be an entrepreneur, not a physician. So I've had a number of healthcare startups that I've sold to public companies. I still have a company. I work full time. So I really designed my approach to trading to allow me to do this mostly at night, and then I put my orders in. I use Thinkorswim or other platforms, but I pick which platform or my broker platform for putting the orders in. And I can often go a day without looking at a chart. And since my methodology, which I teach, not going to do that today, go down to how to trade and what and stops and all that. That's something I do on some of the other videos I do. It's really designed to be almost on autopilot with stops, targets, taking profits so that I don't have to watch it. And as I said, I've been teaching people for years. I have a YouTube channel. I think everybody does. I do a lot of live seminars, and I really enjoy mentoring and teaching. And just to keep my mother happy, I still do things in medicine. There's not many physicians that start a practice, build a practice, and walk away in the prime, but I have this great job. I have a healthcare data and information company. I've got over 3,000 employees worldwide, and I get the ability to actually impact on patient lives still today through some of the programs that I do and some of the publications. And we really focus on making doctors better by understanding what they do, perhaps what they can do better, and then helping them get there. Kind of like I help people in trading. So my world of trading took a major change when I met this guy named Ian Woodward, may he rest in peace. And Ian had his approach to trading the markets. It just hit me as this made a lot of sense if I could only automate it. And what I really loved about Ian and what was different from a lot of the other mentors or teachers I had at that time was he kind of was very and they're all honest in their way, but honest in what his approach was. And he would say with a British accent, I am not a guru. I will teach you to become your own guru. And that is so smart because it's not about what I tell you and teach you or any of the other great people out there in the add-ons in MetaStock. It's what you retain and how you use it. So when I do any of my education, any of my training, that's the goal. I don't want you reliant on me. I want to help you get reliant on yourself. And I've had the same journey that many of you have had, educators, software programs, books, seminars. And so I kind of think I'm like baking a cake. I took all those ingredients, and what came out of it is how I am today. And this is the trading style I have. And the MetaStock Market MRI allows me to implement those learnings to shorten time necessary for my analysis, because you can probably see this little thing sitting next to me on the couch. And those of you that have grandkids know what I mean. There's nothing better than a grandkid, and that one lives 5 minutes from me. And you might get an idea of, unfortunately, we lost this weekend of where I went to school and where, when I die, a lot of my money is going to is the big M. Next slide. I'm changing my own slides. So what about my trading style? And that's enough of me. We're going to talk about how I trade. I'm going to go back and forth between PowerPoint that explains what's in the program and what I do, and then actually using the program. But one thing that I learned from Ian that I'll never change is I trade from a top-down approach. I'm a swing to position trader. I don't, I trade equities and equity options. I have done day trading. I have looked at tick charts and minute charts. Sometimes when you sell a company to a public company, they put a very onerous non-compete on, and I couldn't do anything in healthcare, so trading became my thing. I don't like sitting at the computer all day long. So you'll see me with daily and weekly charts, indicators and scans. Everybody in the world, myself included, have developed indicators. But what are the indicators supposed to do? For me, they're not buy or sell signals, but my indicators are tools that narrow down the 8,000 to 20,000 instruments in the US that I could trade and serves me up 15 of them or 20 of them so I can look at them with my eyes. And it's looking at a chart pattern. I love candlesticks. I think they tell a story. I look at support and resistance. But I use those indicators and scans to help me find them. And I've got a couple of things that I do with those indicators that I think are very effective that I'm going to show you. So one of the folks that I listen to has add-ons here that I went to a couple of his seminars with Alexander Elder. And the first time I went there, I got scared. I like public speaking, but who wants to talk about their trades unless you know in advance and you picked a good trade? But he informed us that everybody has to go up to the front of the room and present their A trade. What's your A trade? Well, the trade that you take all day long and that you're good at. I said, oh, so I like to trade stocks in a long-term uptrend. I want them to pull back to support, and I want to buy them on momentum off support. In yellow are not all markets are going up. How do you trade in a market that's going down? Well, then it's a stock in a downtrend, a retracement to resistance, and then buy on momentum off of that resistance. Well, you'll see my explorations are designed for those three bullet points. Now, I never talk in a program like this about the next two, but I do a lot when I do some of the training that I do to support the people that own my tools. I talk about position based, what my sizing is, what my stop management is, and Alexander Van Tharp, one of the other mentors that I like to call out because of the importance of what I've learned from him, used to actually tell stories about how he could randomly pick stocks. And it's how he managed the stops in money management that determined his return, not the name of the stock. So that's very important. We're not going to talk about that today. And then seasonality is a plus. Now, I mentioned in my training, as a purchaser of my tools, you join the family. And that family gets invited at least 4 times a year. I typically do them from 10 to 1 on a Saturday. Sometimes it goes to 3. It's always recorded and shared back to those that attended and made available to those that couldn't be there when I go beyond how to pick the right stock and what the market is doing. Because there is a lot of value in understanding how you trade and what you trade. But again, that's for a 5-hour, 3 to 5 hour free training that I do at a minimum on a quarterly basis. I do these trades typically in 30 minutes a night, and that how I trade has not changed in 30 years. New tools make it easier. Now, why do I do top down? Why do I care what the market's doing and not just go and look at stocks? And the reason is simple. This is an old slide, but it tells such a great story. I sat in a room, and I couldn't go every month, but I'd always, before they went home, I know what stocks they picked, with a group of smart people who were following Ian, and we would pick stocks that we thought looked attractive. And these were really good stock pickers. And then retrospectively, we would sit down 12 months later and we would characterize what the market was looking backwards. Right now, if I had to guess what we're in a mixed strong. We're still going higher, although we're chopping. But retrospectively, it'll be a lot easier because we'll know exactly what happened. And when they looked at, and we looked at the performance, these really smart stock pickers found that they could double their portfolio value in 20 days, model portfolio, in a strong market. But these same stock pickers in a weak market did horrible. So there's a strong message there. You can't apply the same rules to what you're doing in a good market as a bad market. All right. And so you have to think differently. The second thing here is less obvious, but it's just as important. And why I mentioned before that I put in a process of stops and targets and taking profits, because I've learned the hard way that a lot of times you get a big gain and then over the next month you give part of it back. So I'm always reaping profits out of my portfolio, maybe reinvesting them, maybe putting them in the bank. And the other message is if you're in a bad market, and we occasionally have bad markets, especially if we're in a recession. And if you believe that every time the yield curve inverts and crosses back over zero, it's followed by a recession just because it's happened every year since 1980, maybe it happens again, we may have a recession coming. And in a recession, markets do not behave. And this is where the comment, your first loss is your best loss, comes from. Because if we're in a market that's doing horrible, you don't want to keep in there because you think it's going to get better over time. Choppy market that's not real directional, this mixed week, maybe. I think it's easy to know when you're in a strong market or a weak market, but it's not always easy to figure out the middle two. But this top down is important. And when I get into the program in a couple more slides, it's going to show you how I actually can do this prospectively and what I look at every day. Now, I'm not going to talk about performance here because for me to do that, and to be fair, you should never trust anybody who tells you their performance on a webinar. The rules, I would have to submit my statements and let them audit it. I didn't have time for that. But I can tell you this. On April 7th, I put out a video and I said, a bottom is in. All right, that's, why did I say that? Because of the tools I'm going to show you in just a couple minutes. I think I got 3 more slides and then we're into the product. So I love bad markets because eventually they change. And my best years trading were 2009, 2020, and it turns out 2025 may actually be the best. And it's because of understanding the ebb and flow of the market. Now, I could have been wrong. And I actually, before I did it on YouTube, I added the second line because I wanted to save face if I was wrong. So I think you can find reversals, and I think my tools can help you do that. So top down works best for me. I want market direction to determine most of what I'm doing. I want the leading industries because they lead longer than you expect, and I want the best stock in that leading industry. I personally have learned that day trading and minute trading is not how you build wealth. It's by holding things over a longer period of time. That does not mean buy and forget or buy and hold. It means understanding the ebb and flow of the market conditions and staying in a trend as long as the market's trending. Markets are never wrong. Opinions often are. It's never different this time. And you've got to do the money management. And then I'll leave the historical perspective with this slide that in this country we played chutes and ladders. Excuse me. Ian played snakes and ladders. Talk about something that would not be politically correct in the US. But if you think back to your days as a toddler playing chutes and ladders, you wanted to hit square 28 because it would take you up to 84. And you won the game that got you to 100. And you're feeling really good about yourself. You're playing your sibling, your parent. And the next thing you know is you roll a 3 and you're back down to 24 again. You don't want to play snakes and ladders with your retirement money. So it really helps to have a trading plan, a tested methodology, and sticking to your plan. And then the last slide, just on the top down, to call out what I believe 50% of what happens tomorrow to my portfolio is going to be driven by the market. 20 to 30% will be driven by what industry group I'm in. And therefore, even if I'm a great stock picker, I get 4 dots, double momentum, which we'll talk about in a few minutes. It doesn't really matter if the market goes against me. So let the market determine my stance, find my favorite setups in the leading industries or sectors. And then bottoms up is I just look for the flashy, shiny object that's setting up the most. And I still do that. That's the fun stuff. But in my history, the ones that are driven by industry groups that are leading have a better chance of working than the shiny object that's breaking out in a bad industry. And then different tools to gauge what's working. So this is a slide. But I didn't lie. This is actually the first indicator that I want to teach you about because it becomes pivotal in what I do, how I do my explorations, and how I look at a timing model. This is something that I created about 20 years ago. Ian came to me and a couple of my friends and said, Jeff, I want you to find an indicator that we can use to time the market, whether it's a market, an index, a stock, and find something that keeps you in the trend and gets you out. So we sat down and over about 6 months, we tried lots of different things and we came up with what we call the bongo. And the bongo, it's a trending indicator, but to me, it's also a filter to take trades or not, or to understand market direction. One of the users, Dave, I won't say his last name, was a professional money manager, and he ended up using the weekly bongo as a model for trading ETFs because it was effective. Now, anytime you rely on a weekly model, it takes you a while to develop. It gets you in late, out a little late, but the goal is to catch the majority of the move and minimize your risk to the downside. Now, I want to spend time on the next 2 paragraphs because they're kind of critical. In an uptrend, that weekly bongo is green or red or blue rather, depending on your program and what colors. But when the daily is pulling back, the daily might go to red while the weekly stays green. So if you look at this here, in this case, the weekly's on top. When the weekly's green, it tells me the longer trend is up. And when the daily goes to red, there's my pullback in an uptrend. I can develop scans or explorations that can find me stocks that are in an uptrend that are pulling back. Why is that important? Because remember I said my A trade, that's where it starts. Now, I follow the bongo as a filter on the weekly, but often, especially when something's coming off of a big sell-off, I may enter a stock even if the bongo on the weekly is red, but there needs to be a lot of other supporting evidence that I'll show you. Now, I'm not going to spend much time here, the PowerPoint will be made available to you, but a very smart individual named Stan Weinstein wrote a book on stage analysis and talked about the resting stage before a stock moves, stage 2, the breakout, a topping or consolidation that occurs stage 3, and then a stage 4 breakdown. And it turns out that the bongo actually can help me identify not only where those stages are, but again, the scanning aspect, the exploration, looking for that pullback in an uptrend or retracement in a downtrend. Now let me show you how I use what I learned from Weinstein and what I learned from the bongo to create an effective, for me, timing model. So here let me just go through the different things that I'm showing you. This is a chart of the spider. It is a weekly chart, and the template I applied, in the case of the weekly, it would be the MRI weekly timing model. Okay, that weekly timing model is going to do a couple of things. It is going to put on the chart a weekly bongo. It is going to put on the chart a 30-period weighted moving average. Where did that come from? Well, Weinstein looked at a 30-period moving average, so I thought that might be interesting. And then I tested a lot of other moving averages to see, not to do curve fitting, but to assess, was there a better moving average to use? And let me tell you something that sort of blew me away. If I was to put a 17-day simple moving average on this chart, a 21-day exponential moving average on this chart, or a week, because it's a weekly chart, or a 30-period WMA, they overlap at least 90%. So I thought this must be a good one then. And then what we defined, or I defined in this case, on the bottom is a buy and sell signal for the market. And that to trigger a buy, and you can see the arrow here, two things had to happen. The weekly bar had to close above the WMA, and the bongo had to be green. So this was, I went to this crazy wedding in India last week, and I haven't recovered. I think everybody got a cold. It was insane. But that combination of the bongo and that WMA gives me a buy signal. Now, what's my goal of a trading system? My goal of a trading system or a timing system is get me in early, and I'm going to put an asterisk about this is early or not, and keep me in a long time. And there's no question there. This timing model got me in the market on November 10th of 2023, and it did not get me out of the market until January 10th of 2025. Now, to be honest, when this happened, I was pissed off. Why? Because, man, you just closed a little bit below that WMA, but I follow my rules. And even though there was a little rally afterwards, it preceded the sell-off. Now, if I just relied on a weekly signal to get back in, there's already a move that occurred. So I'm going to use other signals, and I'll talk about that. But if my goal was to capture the majority of a move, and we're still long, and avoid the big drawdowns, because you never know when you're going to get a 2008 level drawdown, I found this thing to work. Now, how do I make it better? Well, I make it better by recognizing that it's not just about the weekly chart. So I am not a counter trend trader. I do not short when my weekly spider timing model says to be long. All right, period. But I may raise cash. When might I raise cash? Well, let's look at the daily model at the same time. The daily model's got a lot more whipsaws in it. So what I do is I look at the evidence that if my weekly timing model is long, then I am focused on the long side. When my daily timing model starts going short, and it will occur throughout that uptrend, I start to lighten up positions. I start to tighten stops, take profits, and raise cash. And I talk about that when I do my videos about how I want to lighten. Why? Because I'd rather be in a lot of cash on the day the market rolls over, so that when the market recovers, I have money left to invest. So I'm not going short typically, because I'm not that fast when the daily signal goes red, but I am reducing my exposure to the long side. Now, I don't just look at the spider and the daily weekly, and now just for the time purposes, I'm going to flip back to the PowerPoint and just talk about that, because I will look at, and I created for everybody, a weekly timing model that includes the spider, the Dow, the Qs, and the Russell. And this is one of the layouts that should come out of the installer if it hasn't come out already. I will be let me just say right now, if you don't have them and you have my tools, because they don't work without the Bongo and the way we've set this up. And this is actually hard coded, which is great because no one's playing games with that. It doesn't repaint. It's there, it stays. I will be happy to share them with you. So that marketmripro@gmail.com if you're looking for any of these layouts. So every night, I don't go and look at just the S&P. I'll start with this chart here. And this is last night, so it's timely. I am I am leaning long right now, and I've actually increased exposure. I've been long since that green line. And right now, these four markets say you're good. Now, I don't ignore the fact that the Russell is underperforming right now. But right now, I don't see a reason to be anything but long. And then I will look at the daily model, and the daily model says it's okay for me and my style of trading to be increasing exposure because the daily's in a buy signal as well. It is built into my layouts. It's something that I suggest you take a look at and see if it's something that can help you. It is the first thing that I do after I look at what the markets did from percentage changes and what were the leading industry groups. All right. I don't just look at the Bongo and the timing model. I follow a number of different indicators. What got me in on April 7th was something that is tied to percent B, and something that is now a slide forever because it was so obvious. But I use other tools. I've already been talking with some of the folks at MetaStock about, I think these are all in here. How do I build them into a way that are usable? And frankly, one of my good friends, Sagar Nandi, has a series of add-ons where he's incorporated these. He actually learned them from me, and I'll call I'm an honest guy. I learned them from Ian, and I was so happy when Sagar put him in his market breadth tool, because it just adds to my analysis and it helps me on that decision making. And then the other thing I wanted to call out, and don't have to show you there, is, let me see if I get the right one to open, is I crunched down my resolution so you could see it better. I use a 4K at home, but I wanted to make this so it was visible. And let me just open up one of them. Let's open up healthcare. So I just got to find it right here. So I actually have applied the same model to sector analysis, and I've done it for a long time. And I've been riding healthcare. Now, there were some painful days this week, and I like looking at directional ETFs like LABU for long or LABD for short. And I use this tool here by, again, trying to get a sense of timing, which is the sector that's moving now, which is the one I want to be on. And just like the major markets that I showed you, the magic of MetaStock and William, he was able to build in the signal, so you don't have to be up here and comparing. Let's see, we close, are we green, are we red? It's done for you. And I think it's important because you don't have to wonder, did any of these trigger a sell? And like I said, it doesn't repaint. I again want to emphasize something that I said before. You can't interpret the chart until the bar is closed. On a daily bar, it would have triggered a sell intraday here, but the bar didn't close until it got back up here, and therefore you don't have a signal. On a weekly chart, and you could just flip to weekly because the indicators are the same. I don't think it'll affect anything, although I'd have to ask William if it would affect the timing. I don't think it would. But on a weekly chart, it's really an issue because we'll get days where we drop down, and this is a weekly chart. It closed on the line and it didn't trigger a sell signal, but for most of this week, it probably threatened. You have to wait on these signals until the bar is closed. Of course, we all cheat and we might front run. So to me, it's really important to understand what the market's doing and what the sectors. I'm 36 minutes in. I haven't talked about a stock yet. And there's a reason for it. I really believe that the success that I've had in the markets over my career are not because I'm a great stock picker. I believe that success has come from the ability of following rules. And following timing rules is what I've talked about thus far. Jeff, I assume you'll interrupt me if there's any questions?
If I can find my magic button. we, did
Ha
have, we did have a question that came in a little bit earlier about how to get the PowerPoint presentation.
Jeff Gibby will have the PowerPoint presentation before I turn off my computer. And I go home at 5. So he'll have it today, so you'll get the PowerPoint when he can post it. Or if you don't want to wait, email me at marketmripro@gmail.com. It might be a PDF that I send you, but you'll get the PDF. You'll get it, 5 minutes after I see your email, which might not be until I get home tonight. Look, I love teaching, and therefore I always give people my decks afterwards because that way they can go back and review.
All right. Thank you very much.
All
That's
right.
it for the questions so far.
So let's say that it's a typical night. I've made my thoughts about the market. And again, if I used a 4K screen here, I would have had 30 comments about, excuse me, you can't read my charts. Well, I can't read these either because they're all crunched up, but on a 4K screen, they look great. And I typically look at the signal line. Were there any new signals today? And this is a real-time chart.
Hey, Jeff.
Yes?
If this is a good time, I do have a couple more questions.
Yeah, go ahead.
One wanted to know, how many transactions do you perform on average per week? Like, how many times do you buy or sell a stock?
Oh man, I'm not. I wish I could show you performance, but I'm not going to show you performance because I do it. And the truth be told, I spend a lot of time on the weekend looking at charts because I just like to. I typically focus on 3 to 5 trades during the week. I enter them into Thinkorswim, and then I manage them with my cell phone at work when nobody's watching because I have a lot of employees and I can't have them seeing me with 4 computers and charts. So 3 to 5 trades per week is typical. If you look at the actual number of trades, I manage my trades a little bit. And what do I mean by that? There are 5 separate option trades. And again, I spend 5 hours on the weekends teaching people to do this at no cost that own my tools. So I'm not lying, and you'll get to participate if you want. I trade 5 different option contract types. My favorite way is trading broken wing butterflies. But I don't trade them and wait to expiration. I have to manage that trade. So I may look at 3 or 5 potential trades a week that I put into the Thinkorswim, but I'm making adjustments on my existing trades. I trade predominantly calls or stocks, so position, long call, bull call spreads, so a vertical call spread. I do synthetic stocks, but I usually buy a put way underneath to protect getting destroyed. I mentioned the butterflies, and I do some back ratio spreads as well. And I teach those specifically. Why do I pick those? And I know that this is not an options class. Options are risky. And what's really risky, I think, is our brain because of position sizing is how I've ever gotten into trouble in options, but options can be considered risky. But I do those spreads because when designed correctly, they are low cost, very well-defined risk, and I like to design them where there's significant upside. And I teach people how to do that. Next question.
The last question is, one wanted to know what is an expected average monthly return with this strategy?
Huh.
Just an
Am
easy
I
one
even,
for you.
is it is and it isn't. And one, can I even say? Look, in a good year, my goal is to outperform the market by 20%. In a bad year, is to lose less than the market does by 20%. I'll go more detailed. Look, I will never put a company at risk by putting up an unaudited performance. So I'm not going to do that. But if you look at any of my YouTube videos, you will see what my performance has been this year. And I will also tell you, even though it's a screenshot of a report from my broker, you still have to take anything someone tells you with a grain of salt. Past performances don't equal the future, but my goal is to beat the markets. And if you've been trading long enough, you'll know that one of the negatives on fund managers is most of them don't meet the index, which is partly why the popularity of the spider, the Qs, etc. So I wish I could tell you, but then I'd have to shoot you. No, I'd have to shoot myself because I'd be in violation of rules that I don't want to violate, at least not on a public call like this. So,
You're caught up on questions, Jeffrey.
all right, thank you. So let's talk about the market, or not the market, rather the tools. So you could see here, the next step is I'm looking at this, and my eyes are focusing here on energy. And the reason my eyes went to energy, it's one of the most recent flips of the timing model. And when Jeff tells you at the end where my training videos are, I focused on energy over this past weekend, and I'll show you why. It's because of that arrow. And you could see the expirations that I did on Sunday night because I promised them to Jeff by Monday. And you could see it was all energy stocks that came up on my explorations. And you can judge for yourself. So I like to see what's working now. Clearly, you can go to a website and you could rank industry group performance by 1 day change is another way. But let's actually look at those explorations because to me, why do I like MetaStock so much? And why did I run to MetaStock early on and why am I so happy? Because it's all about the explorations. I mean, you've got the data from all over the world. It's a great data feed, stable platform. I can give you a long list. But what you got is really good scanning. So I want to talk about my chart and then go to the explorations because the explorations based upon the chart. Now, this might seem kind of kitschy, but it's true. Any internal medicine doc rotates through cardiology, rotates through the ER, and for the rest of our career, we're supposed to know if somebody's having a heart attack. So an EKG meant, and I'm sure many of you have had EKGs, is we put these little sticky things on your chest, your arms, and your legs, and your heart generates a little electrical current, and we look at that current, those impulses, and it tells me your cardiac health. All right. Why can't I do that with stocks? Why do I have to have fancy names and all kinds of indicators messing up my price and volume? I want an EKG of the stock market or of a stock or an industry group. And that's what my chart is all about. So let me tell you about what the indicators are and how I use them. But I've got to do this quickly. And in the PowerPoint, they go into more depth. The bongo we already talked about. This is my trending indicator. The daily's on top, the weekly's on the bottom. As to what I mentioned before, in a long weekly uptrend, each of these red areas was a pullback. Done. High-low extension. How many times have you heard on CNBC, the market is extended? Well, what does that even mean? I mean, in math, I'm a scientist in math. So I created a mathematical formula where every stock will oscillate between plus 100 and minus 100. And when you're greater than 95 or less than minus 95, mathematically compared to your last year, you're getting extended enough that you need to be concerned. I'll teach more about that in those longer sessions. I like a relatively clean chart here, believe it or not, despite everything else here. And I have a 17-day simple in green, 50 in yellow, and 200 in red. Why do I use these? I have no answer except Ian did, and I followed his work forever. As I mentioned before, the 17-day SMA, the 21-day EMA, and the 30-day WMA are almost superimposable. I have a series of dots that help me measure the ebb and flow. You'll notice that in MetaStock, it's really easy to tell you what they are because each one has a number. And they involve what are called green candle low, red candle high, which are single candle reversals. A Wilder PSAR, which is a widely available. Why is it there? Because it's confirming a direction of the market for me. People know what the squeeze is. It's a buildup of energy before a big move. You could see here the stock goes sideways and then you get your big move. All right. And then I have my EKG impulses. I have momentum, breakouts, volume, and you won't see it on this chart because there's not a big gap that met my criteria, but gaps. And then for people that want more algorithmic trading systems and things that might work on futures in short term, is the EMS, which I use across different time frames. Just an early signal. It gave me a buy signal down here, and it's designed to work very quickly. And again, I'll teach exactly what's in it at the appropriate forum. So I can look at my EKG here, and I could see a market right in here where it's gone from a downtrend to an uptrend, and you went through a squeeze, you started firing my indicators without even looking at it. I know that this is a market that's setting up and I want to look at it. Now, these next two will sound boring, but boy, are they secret weapons. All I did is I compared the relative strength of whatever we're looking at, and we're looking here at CRDO, which had a good Monday on earnings. And I compared the relative strength versus the spider. And then I put a moving average. And I'm looking for crossing above or below that moving average. You'll notice back here, I'm not paying attention to this stock, but notice that the daily relative strength versus the spider started to outperform and the stock went up. The weekly, it's going to be a lag because it's weekly, started to outperform and the stock continues to go up. I learned to start scanning for when these stocks start to separate from the relative strength of the spider. And then here's on balance volume. So here is a large laundry list of indicators on one chart, but they serve a purpose of helping me identify stocks that are setting up and getting ready to move. In the PowerPoint will be definitions of what a gap is and a volume, a breakout and momentum. It's a special breakout signal to show price movement away from the mean price clusters. So we want to find things that are coming out of chop is what that's about. And then even the definition of the high-low oscillator I give you. It's harder to code than you think. And then let's talk about the explorations. And I know I've only got a few minutes left. Explorations are, to me, the again, it's the steroids in MetaStock. It's what makes it work for me. So I have developed with William, who helped program it, a series of explorations to find the stocks that I want to trade. One of them, momentum, is sort of my money, is the money one right now, and I'll show you how that works. And then I talked about pullbacks and uptrends and retracements and downtrends. It's to find me stocks that meet these criteria, that have my signals telling me they're starting to move. And then how about looking at trend lines, long-term downtrend line, breaking above it or failing at it? Same thing with short-term. That's the purpose of the explorations. And so if I was to look at, well, I popped up with it on it, close it for a second. So it doesn't matter what the chart is here, but if I was to open up explorations, I ran this last night, so the data is going to, or not, excuse me, I ran it this morning on last night's data. So it's the same as running it last night. I ran it at home on my home computers last night. And you could see the list of them here, but I better show you a couple of things that you need to know, or you're going to have not problems, but you're not going to get any stocks. You want to check off, and now my computer is getting mad at me. Come on. I know I got a lot of windows open. All right. You want to check off records to load, and you want to put in a minimum. I use 800 at my home computer. I did 1250 here, which I think is the default. Do not leave it on load minimum records. If you do, you'll think you have no signals. The watch list filter will help you build your index. Here's my index of stocks I look at. I'll probably make it smaller. I look at each of the different explorations, and if you hover over it, you get an explanation of what we're looking at. And so I have created these to make my life easier. So I ran them. The reports are here. Let's start with the momentum. And I actually ran this last night at home and was looking at the stocks, and you'll find in the PowerPoint, in case I do run out of time, I just want to show you that this is here. I have each of the scans, the list of stocks that popped up, an example from last night, what the signal was, and you can probably assume I didn't pick dogs. They may have not performed, but they look good. So if I look at the up-down on momentum, and this should have run, oh, I ran, I did a cardinal sin when I ran that. So I had to set the date on the explorations. I just realized that. This is why you don't use a computer that you don't normally use. I had to flip that. So I'll go into the charts that I printed out from last night. So I ran the scans at home with this checked, so I wasn't looking at 11.5. Now, actually, I'm kind of glad it did that, because you might say, all right, he said the market bottomed on April 7th. What if I ran the scans on the data from April 7th, and he's saying the market's going long, so you're not looking at bearish scans? What would you have found? So I basically, 800, current date, exchange date and time, daily charts, use selected instruments for all explorations. I run them and I walk away, I eat dinner, I come back and they're done. In this case, I came to work and I missed that one there. So I'm glad I did what I did last night, because it's going to be faster anyways, and we're going to run out of time. So I started with the dual momentum.
If it is a good time.
Okay, go ahead.
A few questions come in. Let's see. Reed Harma, S. Reed Harma in YouTube wants to know if he can change the relative strength instrument versus SPY to Nifty because he trades the Indian markets.
There's no reason why you can't, except we probably would have to have William build it in.
We already built it so that you can change it to whatever index you want.
Perfect.
It's in the manual. And if you need help with that, is there an indicator you can edit in there that actually kind of reference it to a different, whatever security you want?
Would that do it in the scan as well, or just on the chart?
Yeah, everything. It's a global indicator. It checks that setting every time it runs. So once you set it, You'll have to set it back if you don't want it there anymore. Bradley wanted to know what is the exploration that can find change in weekly and daily relative strength. Thanks for the question, Brad.
Sure. Well, I actually build it into many of them. And let's just talk about where we're sitting right here with the dual momentum. The dual momentum means that I fired the last two bars, the momentum dots, which are the dots that when you look at the manual or on my PowerPoint, they match up with number 4, but they're the dots right above the squeeze. What I have found when I've gotten these 2 bars in a row, it's been a signal that's been pretty impressive of late. Now, I don't just take the trade because of that. Here's the daily relative strength breaking out. Here's OBV breaking out. I can't tell here. I'd have to be enlarging it. I think the weekly hasn't fired yet, which is fine because as I showed you on the other example, the weekly is a laggard. But look over here. An OBV of 1 tells me that the OBV has broken up above the moving average, and it did it 3 bars ago. A relative strength of 1 says the relative strength versus the spider is positive 1 bar ago. So it just crossed a day ago because you'll get zeros if it's crossing right now. We did have in the scan the weekly RS, and it was taking forever to run the scans, which was the problem because it requires a lot of data. So if it was something that was desired, we could certainly put it back in. I'm using it as a filter to take the trade or not to take the trade. And I love the fact that it's sitting here. So this was a dual momentum bullish. The high jump looks like it's at 97. So that's something that I have to think about. The fact that it's been going sideways, I might be more willing to take it. It's broken out. I think this may be an all-time high that occurred yesterday. So this was the dual momentum bullish. The dual momentum bearish was great because, well, this market's rolling over. This stock here had all kinds of things. It had, there's your pullback in an uptrend. The daily's gone to a downtrend. The weekly is still green. High-low jump is neutral. It's -3. We ran into long-term resistance and failed. So this would also show up on the long-term trend line. It would be a bounce because you came up and you failed. It's got the double momentum, a squeeze. You're breaking down on the relative strength on this bar, and you're breaking down on OBV yesterday. Again, the weekly is always going to lag because it's a weekly signal. So this was another one. Again, I'm just taking them from the list. There were 28 results, and I looked at them, and there were several that looked attractive. The pullback and uptrend, this is my go-to besides momentum. Remember I said what my A trade is. Stock is in an uptrend. Check. It's pulled back. Well, there you go. Long-term uptrend on the bond goes green. Here's your pullback, and you come out of the pullback. And then it's got momentum signals firing down here on this bar. And it broke out of a short-term downtrend, so it will be in the short-term trend line breakout scan. And you got a long-term trend line that it pulled back and bounced off. This is like the perfect looking chart. This is, not to say it went up, Brookfield Infrastructure. They do a lot of investing in the data center infrastructure. So again, it met my criteria. Retracements in a downtrend. Well, we're not in a downtrend in the market now, so now I'm counter trend trading. So I've got to be careful here. But we can find them. So here is a long trend line. You're kind of more sideways than downtrend, but you are lower than you were on the left. And so this would count as a retracement in a downtrend. It has 3 bearish signals here. Momentum, breakout, and volume. So that gets me interested. It bounced off long-term trend line and came down, a false breakout. What I wouldn't like about this trade is I'm not going to trade something that's right above the 200, which is most likely to be a place that it's going to bounce. Again, I'll leave these because I'm going to run out of time. I'm running out of time for the future, but in the PowerPoint, we'll have examples of long-term downtrend breakouts, and I did highlight the key findings. And so just to finish up, and I always go too long because I like to talk. You got to have a trading plan. This is the stock. This is the pattern I'm looking for. And if you go back to that ATAT, it's exactly what you saw. And just to finish, as I said, my involvement doesn't stop with the purchase of the add-on. I do live meetings. And why do I do all these meetings for free during the year? Who do you think comes to my live meetings and pays for them? And I do the live meetings not to get rich. I like doing live meetings in person. I guess I've been doing this for a while, but join my Google group and you'll see the different things that I can do to help you. You'll get invited to the quarterly training events, which I do online that are free to owners. You'll get invites to the live seminars that I do. I do one in June in Orange County and one in Palm Beach in October or early November. And any questions about anything I talked about, apologize for going over it, which is a problem I have. But marketmripro@gmail.com, and I'll answer them the day I get them. So I'll turn it back to you, Jeff, and thank you for the opportunity to really for putting my stuff into MetaStock, to have this opportunity today.
Of course. You did a great job with it. I should have told you at the outset, with this particular webinar, it's okay if you go over a little. We don't have like a bunch of speakers lined up.
Yeah, that's true.
So,
except I do work for a living, so I've got a big sign on my door, don't disturb until 1.
All right.
I can answer questions then if you have any.
I don't have any. We got them all.
Okay.
So I did. Okay. I do want to talk a little bit about the offer, how to get it, all that kind of stuff. Jeff, before I do that, I want to say thank you for coming in and all the time you spent with William on this.
Oh, thank you guys. William's great, and we can make it even better. But thank you so much.
Yeah, you bet. Thank you. Let me go ahead and kind of get my camera going. And I'm going to share my screen right now. And here we go. Here's a picture of the box. Okay. All right. Well, I want to just kind of walk through exactly what this is. Is my camera on? Hi. Okay. How to get it, all that kind of stuff. Jeff did a really good job of kind of showing all the layouts that are involved, the indicators, the MRI, all that kind of the scanning. I love scanning. One of the things I would say specifically about the scanning for MetaStock is, unlike some of the other things where you're running a scan that is going to just give you results based on yesterday's data or whenever the server decided to run the scan, you can run the scan at any time during the day. And that's if you have DC or RT. So let's talk a little bit about what market MRI is. Jeff talked a lot about his top-down analysis. He covers it also in the manual that he goes with. As part of market MRI, you get the bongo timing model, the dots indicator, the high jump, the relative strength versus the SPY, or in your case, Sreed, the Nikkei, I'm sorry, not the Nikkei, but the Nifty, whatever you need to kind of benchmark in terms of the index, you can. The timing signals that give you the entries and exits with precision. There's a pretty big toolkit. As part of it, you're going to get 11 custom indicators, 8 explorations, 3 different expert advisors, a system test so you can go in and test it and see how well it works historically with historical data, the templates, and professional training videos. These are something that we're kind of just putting the finishing touches on. The training videos will be available on your downloads page within a few days. Early next week at the latest, later this week at the earliest. So we'll have those available. There's basically 3 of them, and they're going to design to kind of help you get them started. They'll be up there available relatively quickly. So in terms of the market MRI and the prices for Jeffrey Scott's market MRI, the normal price of this is $997. As an introductory launch offer, we're going to do $597. We're going to give you a money-back guarantee, so you can try it out for 30 days. If you don't like it, you can get a refund. And we'll even throw in a trial to MetaStock as part of it. If you haven't heard of MetaStock, MetaStock's been rated the best software in its price category for 32 years in a row. And we'll give you a free trial of that. We'll give you a money-back guarantee on the market MRI. You'll get to be able to go through all of the training videos, make sure everything works well for you. And if it's not, a very low-risk, high-reward offer, right? To do this, you can go to Market MRI, metastock.com/Market MRI. You can click on the links that Greg is putting in the chat and in the YouTube chat. You can give us a call. We'd be happy to answer any questions that you have. You can call us in the US and Canada at 800-882-3040. If you have any questions and you want to talk to us from anywhere, metastock.com/sales chat would be a really, really good way to get a hold of us. So awesome add-on. We're going to back it with a money-back guarantee. We're going to let you try MetaStock for free as part of it. It's only $597 on the introductory rate. Metastock.com/Market MRI. 800-882-3040. So I don't see any other questions. I hope you enjoyed the event. Again, big thank you for coming. Big thanks to Jeff for kind of all the work that he put into this. And it's great. Give it a go. Stay healthy. Stay well. I'll see you at the next time.